Hello everyone, hi, welcome to the channel of Wall Street Mojo. To know more about this video, revenue versus turnover, watch the video till the end, and also if you're new to this channel, then you can subscribe us by clicking the bell icon that's given below. I welcome you all for this wonderful session on accounting. Basically, this is an accounting concept that we are going to learn today, and it's basically an income statement based loop concept. Well, what we are going to do today is we are going to understand the difference between them with the help of the infographics, both revenue versus turnover. What are the differences? I mean, the meaning, effects, ratios, their importance, some of the examples, the types, how they are reported, and how exactly the formula works. Then we are going to learn some of the key differences and finally head-to-head differences with the final conclusion of the same. Well, let's begin for today. The topic revenue versus the turnover. Well, there is a very key difference. There is a very key difference between revenue versus turnover. Is that, the revenue refers to the income generated, by any business entity by selling their goods or by providing their services during the normal course of the operation. Whereas, the turnover refers to the number of times the company earns the revenue using the asset it has purchased or generated in the business. So what is revenue? Let me again, so that it goes in the brain in the much better format. Turnover here. So what is revenue? The key difference between revenue and turnover is that the revenue refers to the income that is generated by any business entity by selling its goods and by providing the services. This is your income. What is your turnover? Turnover refers to the number of times the company earns the revenue using the asset. The number of times the company earns the revenue with the help of the asset it has purchased or generated in the business. That is the difference between the revenue and the turnover. Revenue and turnover are basically often used interchangeably in many contexts. So they also mean the same. For example, asset and inventory are turned over when they flow through a business entity or either by sale of the assets or outliving the useful lives. So when these assets generate income by sales, it is termed as revenue. And turnover can also refer to the business activity that are not necessary are involved with the sales. For example, the employee turnover. It doesn't mean that. In this tutorial, we'll look revenue versus turnover in the much more detailed format. Let's learn with the help of the infographics here. Well, we will start with the definition first. Revenue. Revenue refers to the money that is earned by company by selling its goods or services for a price to its customer. So what is it? Goods or services. And here, how many times the company makes the money or burns. Turnover refers to how many times the company makes or burns through the assets. As simple as that. Second, effect. Revenue. Revenue affects the profitability of the company. And turnover affects the efficiency of the company. Revenue is what? Profitability. And turnover is what? The efficiency. Now, the ratio. Revenue is used to calculate the profitability ratio like gross profit margin, operating profit margin, right? Those are net profit margin. Turnover ratios are used widely as inventory turnover ratio, how fast it is moving, asset turnover ratio, sales turnover, accounts receivable, and accounts payable ratio. So it's movement of your accounts payable ratio, accounts receivable ratio, your turnover ratio, your inventory turnover ratio, and so on and so forth. So it is basically, you see, there is a movement of receivables or probably inventory or probably your payables and so on and so forth. So you understand now the meaning. Revenue is more focused on the profitability side. Turnover is more focused on the usage of the assets and whether you have burnt or whether you have earned. As simple as that. Revenue is the total value of the goods or service that is sold by the business. It is the total value of the goods or services that is sold. I mean, you're buying and selling of the goods, whatever profits you make, that goes in your net profit or gross profit. But when you talk about turnover, turnover is the income that a firm generates through trading of the goods or services. Here, sold. Here, trading of the goods or services. Importance. Revenue is important to understand because it is the vital factor that determines the very important growth of the company. And turnover it is important to manage the production levels, ensure that nothing is left idle, or probably just-in-time approach that you use for inventory. And as inventory for an extended period of time, so turnover helps you to figure out that. Well, example. Revenue is calculated as the total amount of the computers sold multiplied by the price. Number of computers into price. As simple as that. So that is going to be your revenue. But what is turnover? Turnover means the total amount of the computer sold in a year. Okay. Now the types. Revenue can be of two types, operating and non-operating revenue. Operating means which is revenue that is coming from the day-to-day business of that particular entity. Non-operating are the one like interest from your fixed deposits or any other income which is not based on the main operating business for which it has been operated. Turnover may be of three: inventory, cash, labor. From the ratio that we discussed here, it seems now you have an idea. How does it report? It gets reported. It is mandatory to report and is the first line item in the income statement. You see revenue and there is other income, right? You never see turnover first. And it is not mandatory to report turnover, but it is instead calculated for understanding these statements better. Formula. Revenue is calculated as the total sales minus the returns. Revenue is what? Whatever sales you do, less the returns. And few turnover formulas are cash turnover, net sales divided by cash, total asset turnover, then it's basically sales divided by average total asset, fixed asset turnover, that is fixed asset divided by net fixed assets, and so on and so forth. Turnover has many turnover formulas. So I hope by far now you have got an idea like what we are talking about here. So let me just quickly make a reject or churning of the topic here. So now the key differences that we are going to learn here is that the revenue basically represents the amount of the money that company makes by selling of its goods or services, okay, to the customer. On the other hand, turnover refers to the number of times the company burns through the asset like inventory, cash, and workers. Here revenue is considered as important because it helps to understanding the strength of the business. Okay, it is more on the strength part because that's the most important thing. The customer base, size, and also the market share. And an increase in the revenue is a sign of the stability and showcase confidence of the business. For a company to get a loan and capital on a credit, it is very important for them to have a stable revenues. Account receivable turnover have and inventory turnover are the most AR and inventory turnover, AR and IT are the most important commonly used metric which helps in determining the liquidity positions of the company. Revenue is mentioned as the sales on the income statement and is mandatory for all the public companies to report. Turnover on the other hand is not mandatory to report as is calculated for understanding these reported statement better. Revenue can be probably operating or non-operating. Okay. And revenue is the revenue that is earned from the regular business activity, while non-operating revenues are the additional revenues that gets generated through the other activities like rent or dividend. Revenue is calculated how? The total sales less any returns. Okay. While here, the turnover ratios are calculated like cash turnover, net sales divided by cash, total asset turnover, that is net sales divided by average total assets, and fixed asset turnover, and so on and so forth. Revenue basically affects the profitability of the company, while turnover affects the efficiency of the company. Now, revenue for a computer selling company can be determined by multiplying the number of units sold into the turnover and can be determined how many number of units that have been sold. Here it's the total amount. Revenue is basically important to understand because it helps in determining the growth, okay, and the sustainability of the company. On the other hand, understanding the turnover is important to manage the production level, right time, just-in-time approach for inventory, and that is nothing but is left inventory that is left idle or for an extended period of time. So you need to make sure that things are in the right way. Well, finally, after all of these differences, discussions, let me make my final conclusion on this particular topic. The difference between the revenue versus turnover is complex, but very essential for all the organization to survive. The increasing and the maximizing revenues as a vital aspect that all the organization they strive to achieve. Now, comparing revenues year on year basis, it helps them to determine which direction the company is heading into. If there is any scope of improvement or not, that needs to be taken care for. For determining the turnover ratios that are correctly been calculated or not, it is very important to have the benchmark set. So determining the correct turnover ratio mainly depends on the nature of the industry and the business time. Although there is a difference between revenue versus turnover, both are very important concepts to the business. Well, that is it for now. I thank you everyone for joining the session. If you have learned and liked watching this video, then please like, comment on this video and subscribe to our channel for all the latest updates. Thank you everyone for once again for joining the session.